And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. And as usual, we will have lots to discuss here this week. We're going to take a look at the broader markets. Where did they close? And of course, underlying sector rotation that's continuing to take shape. And all of this is designed to help prepare you not only for next week, but beyond. We want to have that bigger vision. So to start, let's take a look at some of the headline news that drove price action last week. And last week, it was all about anticipation regarding the Federal Reserve's interest rate decision. And that did come to light on Wednesday. Fed Chair Powell and the Federal Reserve announced the expected pause to a rate hike in Wednesday's meeting. However, going forward, there will be 2 anticipated additional rate hikes through year end. Now, that did initially rattle the markets. However, it was very momentary. The markets did bounce from those remarks. I think beyond anything else, it removed the uncertainty, and uncertainty is not a friend to the markets. So that took shape on Wednesday. Since then, we've seen a nice continuation rally. We did get core inflation data, and that was another settling element to the markets. Came out on Tuesday and Wednesday, core CPI and as well PPI, the producer price index. And both numbers showed that while we're not seeing a sharp reduction in inflation, we're not seeing a sharp rise. And that's signaling a potential leveling off of those inflated numbers, or of the inflation being on the rise, another factor that helped soothe investors' nerves and propel the markets higher. From there, we did see weekly jobless claims. They did come in at a very relatively low, historically low level, another sign that the economy may be leveling off and helping put recession fears back a little. We also did see retail sales rise 3% in May, all about the inflation fears receding a bit among consumers. And we did see consumer sentiment rise to a 4-month high, another because of recession fears receding. We are seeing the sentiment among consumers rise. Fed Chair Powell next week is going to be speaking to the House for 2 days. That's going to take center stage. Also, we will get flash PMI numbers, that's manufacturing, as well as the service industries. And that can be market moving, not certainly as much as some of the other data that generally gets released. And also housing data will be released next week. The housing market, of course, and those stocks have been on the rise here. So that's it for the news. Let's go ahead and take a look at the broader markets and see where we closed for the week. And here we are with the daily price chart of the S&P 500. I kept that 4,300 level there as a benchmark. This is a level that certainly for the last many months had been a key area of upside resistance, a longer-term key area. We were able to advance above that last week and take a look. This week's rally in the markets, 2.7% gain for the S&P 500. Keeps us elevated above this key area. That's very good news for the markets. In my weekly MEM Edge report, twice weekly, I've been saying that I would need to see the markets remain above that 4,300 level for at least a 1-week period to provide that conviction that a longer-term uptrend is developing. We can see the RSI in positive territory trending upward, likewise with the stochastics. Now, of note, the RSI is now in an overbought position. That takes shape when it gets there above that 70 level. We can see historically that it can be a precursor to, at the very least, a leveling off sideways potential price action. So keep an eye out for that. from here, I did want to highlight the Nasdaq. And of course, the Nasdaq has been leading the markets this year. And I wanted to highlight there as well the RSI in positive territory. The Nasdaq was up 3.3%. As we move through today's show, I'll share with you where that relative outperformance and strength took shape. Also, why there are some very, very symmetrical price action taking place. If this, then that. I'll share with you what that is. But looking here at the NASDAQ now, we can see that the RSI is even higher. Now, back here when we got into that higher RSI level with the NASDAQ in the beginning of this month, I did mention that that is a sign that we could see at the very least a pullback or leveling off. And that is exactly what took shape here a week and a half ago with this sideways price action. From there, we have advanced, but it is worth noting that we are even more overbought, and historically it could lead to a pullback. So from here, let's take a look at another view of the S&P 500. And this is very encouraging as well. It is the equal weighted S&P 500. And you can see that we are continuing to advance. Now, if we look at this equal weighted S&P, take a look at it going back to the beginning. We did see a little bit of a rally here in January, but subsequent to that, it was very much in a downtrending phase as those mega cap FANG stocks were really dominating the tape by way of higher price action. But here more recently, as the market continues to broaden out beyond those FANG stocks, beyond those centric tech names, we are seeing continuation rallies in cyclicals, and we will get into that as we move on. But another encouraging sign for a potential continuation rally in the broader market. So let's go ahead from here. Take a look at those 11 underlying sectors within the S&P 500. And this is a 2-month daily price chart view. That relative strength indicator is the sort that I'm using. And the relevance here is we want to see where that outperformance has been or may be beginning to shape up, all with an eye toward you participating in that sector. Rotation is very important, certainly to my work. The affiliation of the stock that you choose relative to getting that sector part right. 33% of your stock's advance or deterioration has been aligned with the movement in that underlying sector. So let's take a look here up at the forefront at consumer discretionary, technology, and communication services. And that has been the case for a while now. What I did want to point out to you is the fact that technology was a top performer, again, up 4.3% for the week. As we move forward, I'll share with you where that strength was. And then also discretionary up here at the forefront. When you're looking at these sectors, you'll also want to be keyed into what the heavyweight names are, see if that could be the reason. And certainly it is here again this week with Tesla advancing quite a bit higher than the markets. However, Amazon is equally heavily weighted, and it underperformed for the week. But there certainly are other vibrant areas among discretionary with consumer sentiment, retail sales numbers coming in nicely. But let's take a look at some of these cyclical areas. Industrials up 3% for the week, a very significant advance. You can see that that momentum shift is continuing to remain upward. I'll share a couple of names there, but there definitely is vibrancy. We have a major name that is in that group, Bellwether, due to report next week. I will tell you now because sometimes time runs out, but it is Federal Express. FDX is due to report on Monday. Transportation of goods. If we do see an increase in their outlook, that would be constructive for the economic growth outlook as well. Here we are with basic materials up even more, 3.4%. We did see a number of the metals stocks, also chemical names on the move higher. This is all about the recession fears receding and a move into these cyclical areas. We did see financials up this week, but only 1.3, so less than the broader markets. What I want to focus on here and share with you is, to me, an interesting move that has been on my watch list. I'm on the lookout here. This is Consumer Staples. XLP is the ticker symbol. It was up 2.1%, so less than the broader markets. But what I'm focused on here is the fact that within the group, we've seen this leveling off and a nice uptrend emerge. Take a look at that MACD black line up through the red, telling us that this downtrend has reversed. Now, these staples names were on the move here earlier this year, all about earnings, the ability for these companies to increase pricing in the face of inflation. And because of consumer loyalty, they were seeing sales continue to remain quite high. This deterioration here was all about comments from retailers outside of state that sell staples products that were suggesting that consumers had shifted their buying patterns. They were not having that loyalty anymore. They were going to those broader brands and looking for the lowest prices. That does seem to have stabilized. So I'm on the lookout for names to continue to emerge, and I will add them to my MEM Edge list as warranted. So from here, we want to take a look beyond these broader markets. I'll share with you some of the industry groups that I find really powerful in staying on top of rotation beneath those sectors. Get that industry group right. And from here, we can take a look. I'm going to go ahead and update that at 2-month daily price chart view. And we do have the Nasdaq up here at the forefront, but I will share with you one of the leading sub-industry groups within technology was software, again, up over 5%, continuation rally there. I'm going to share with you some of the reasons and some of the names. Also, semiconductor had another great week, up 4.2%. And both areas have a position of the haves and the have-nots as it relates to names within those industries that are faring better than others. It will have everything to do with growth outlook and growth prospects. So you do want to be aware of that if you are looking to enter selective stocks. Another area that had a very nice downtrend reversal this week, this is iShares Medical Devices. This pop here is all about Goldman Sachs annual healthcare global conference that they hold, of course, each year. And there were comments from one presenter in particular that caused this group to pop. I'll share with you at that as we move forward. Also, transportation stocks on the move. The Dow Jones Transportation Index was up almost 4%. And you can see this nice rounded move, base breakout this week. This is very constructive because, again, these transportation stocks do fare well if the outlook for the economy is bright. And so another cyclical area moving up here to the forefront. We did see a little bit of a stalling on the small cap move. It was very fast and furious back here in the beginning of this month. And at this point, we are leveling off a bit, which is fine, would be anticipated given how fast it did increase back here. And then also a couple of one other area I did want to highlight for you that's wobbling, bouncing around. This is KRE, the regional banking ETF. It was down about 1% after this advance, pulling back to that 10-day simple moving average. It's certainly on my radar, as are all of these areas, because of course you want to capture and get in front of any rotation that you could then participate in by utilizing individual stocks. So I talked about sharing with you the movement in names that were the top performers. I did screen the top 20 names that were outperformers among the S&P 500. And the reason for the outperformance in those names is not surprising to me, but I will share it with you and you may find it useful in your work. So first up here, I'm going to take us over to a different site very quickly. And this is information that you can get on any given site, but quite simply, the biggest movers on any given day will easily be stocks that have received Wall Street upgrades. I was hoping for a more vibrant list, but today we didn't get a whole lot by way of that, but oftentimes you'll see a whole page full of upgrades. You can sort it by market cap and so forth, and they will generally be green. That has been one of the primary drivers of those big outperformers. analyst upgrades. So from here, I'm going to share with you a couple of names that did experience an upgrade earlier in the week, and you'll take a look and see the impact that that can have. This is Intel, of course, a well-known semiconductor stock. Take a look at this advance. Earlier in the week, there was an analyst that talked about Intel doubling their graphic card sales for the current quarter. And the news did push the stock out of a base into a confirmed uptrend. So really highlighting why that would be a list for, if I were you, that I would put on my radar. Now, this particular chart is not attractive, but it is Estee Lauder. And here we are again, these gaps up. The initial gap up for Estee Lauder was related to an analyst upgrade. And it really had mostly everything to do with how depressed and down and out low PE the stock had gotten relative to their growth outlook. But you can see the sharp advance that followed that. Another midweek upgrade, DPZ, Domino's Pizza, gap up, all about Wall Street being intrigued or certainly encouraged by the company's really great movement toward delivery of all things, but more importantly is the fact that it was an upgrade that really propelled. Could easily be for shorter term traders, but also look for longer term moves beyond that. Nvidia now has a $500 price target from Morgan Stanley. It's trading at $426 right now. AI chips are coming in even faster than anticipated, according to their work. And then one other area that has intrigued me in their advance, and despite the fact that they've had significant advances this week, they've also had a ton of upgrades, and that is cruise ships. This is Carnival Cruise, and you can see that this stock has had quite the advance. What's taking place here among these cruise ships is not only have they reached pre-pandemic as far as the number of individuals that are on board, but they have had an ability to raise prices with not a lot in the way of pushback. So in turn, you can see this sharp uptrend in this case, we're looking at Carnival. I'll go ahead and share with you another name. But when these names really get supercharged and moving, you will want to use a 5-day simple moving average. That's that blue line. Pullbacks to that 5-day make the stock an ideal buy point. However, at this juncture, I would argue we are in an overbought position. NCLH is another, and we can see a very similar dynamic taking shape here with that 5-day. Now, oftentimes from here, I like to go ahead and take a look at a weekly chart, see where the price action is relative to historical precedent. Certainly during that COVID period, you would anticipate this particular name among all cruise lines to at least level off. And we actually saw a little bit of an increase as people began cruising again, despite COVID still being very relevant or certainly in the markets. So from here, an intraday 15-minute price chart can be really helpful if you are looking at these stocks as they gap up after an analyst upgrade. So here we are on the 12th, this gap up, super high volume. As long as your momentum metrics remain in positive territory, you could easily see further upside. So from here, I was able to share with you some of these stocks that were on the move due to analyst upgrades. I have a number of other names, but I do want to move forward because there's another very prominent reason, and this is very consistent week after week. It's not new to the current period in the market, but it does bear a closer look, and that is the release of earnings. This is Oracle, and we can see they came out with numbers earlier in the week. Big gap up. Take a look at the volume here indicating accumulation, and the stock has subsequently entered into a nice uptrend. In addition to reporting earnings and sales that were ahead of estimates, that was this gap up. The following day after reporting earnings, Oracle came out and talked about AI features that they are going to be adding to all of their platforms, and that subsequently propelled the stock higher. Another software name, and again, I talked about software being one of the biggest movers, 5.1% this week. This is one of the reasons. Here we are with Adobe. They also came out with earnings ahead of estimates and also talked about their AI capabilities. And they are really viewed as being in the forefront with that. Among other features, there's an ability to convert text into images using AI, lots of other features as well. You can see the stock currently is overbought, but very healthy gains in both of these names, as well as others. One of the names from my MEM Edge report was up over 11% last week. Let's take a look at another stock that reported earnings, and it is Lennar, a housing stock, LEN, gap up into a base breakout. You want to see that high volume indicating accumulation, and we can see that MACD crossover indicating a new uptrend. The stock relative to prior periods, the MACD still has room to run. And as we continue to see vibrancy in these housing stocks, we'll have data next week as well. I anticipate further upside. We have a winning name on my MEM Edge report there as well. So I also wanted to share with you with that Goldman Sachs conference. It's not something that most people would be tuned into, but it can be market moving. Here's a company that presented on Wednesday, and their comments moved not only stocks in that group, but also auxiliary stocks. And this is another feature, or certainly something that you would want to be aware of, because it does occur. I talked about housing stocks, and in prior weeks I've shared with you companies that provide, whether it's products or certainly heating devices and so forth for these homes. There are add-on groups that will fare well when major industries are doing well. So here we are with UHS, Universal Health Services. The company provides medical insurance, and this gap up on Wednesday was all about comments from management that they are seeing a very big increase in elective surgeries now that COVID is more behind us. And in turn, that pushed this particular stock higher. But we did also see medical devices and medical products companies that would benefit from this drastic increase in surgeries that is shaping up. Again, nice high volume with UHS. We can see this downtrend reversal here with the metrics in positive territory by way of MACD and the RSI. But from here, I'm going to pivot and take us over to look at some of the names that were positively impacted, but also have positive charts. Here we are with Boston Scientific, a medical products company, and we can see this gap up into a nice uptrend. What I find super attractive about BSX is the fact that this MACD has just entered into an uptrend. Downtrend reversal signal taking shape there. Secondary price action, also very critical, is the fact that this gap up pushed the stock into a base breakout. And then, of course, you want to make sure you're aware of those volume characteristics, nice high volume there. And this is what we're seeing, because some of these medical product stocks had been beaten down, and news of increased need for their products helped push these stocks higher. Here's another name, Medtronic, MDT is the ticker symbol, and they are diversified. Certainly they're in diabetes, but other areas as well. Not quite as attractive. This is a gap down after the company reported earnings that were not up to par. But subsequent to that, we did experience a nice double bottom, gap up, and a move by these metrics here, momentum-wise, into positive territory. Another medical product stock that we can take a quick look at here is Edwards Lifesciences, and I believe they are in their products are geared for heart. And we can see that this particular name, very similar metrics with that downtrend reversal that took place here. We can see that the stock gapped up into a base breakout, nice positive momentum here, nice volume. So I think you can see what I'm seeing here. I believe, share with you that IHI industry group, and you want to have that wind behind your sails, and it is. Here we are with the US medical devices ETF in a very nice uptrend. And one last area that I wanted to share with you that was on the move and has been for some time, and that is airline stocks. I believe I shared this ETF with you last week. This is JETS continuing to advance. What's happening is these airlines are seeing full capacity and able to raise their prices without a lot in the way of resistance. Here's Delta, certainly not earlier in the move, but I did want to share with you that concept because we were beginning to see analyst upgrades. Last up on that analyst upgrade that I was sharing with you, how it does in fact help a stock. Here we are with Caterpillar, and they did have two news items last week. They increased their dividend and also price target upgraded to 280. And this is from Bank of America. So this is all part of that move into those cyclical names, Caterpillar certainly being a bellwether name. And everyone, that is it for this week. Have a fantastic long weekend. I'm going to look for you again here next Friday.